If you're new to buying gold, you might be a little bit overwhelmed at the concept of spending $2,000 to buy 1 ounce, or even $75 to buy the smallest quantity of physical bullion. But what if I told you that you could be exposed to gold for less than $35 and have more than a 4.5% yield on it? Instead of buying the physical bullion, consider investing in a gold miner. Not only do you get exposure to the price of gold without having to pay the premium cost for physical bullion, you also typically get a dividend yield. Another nice part of investing in gold miner stocks is that you have more liquidity. As long as the stock market is open, you can either add to your position or take profits whenever the market's open. You do not have to worry about finding a buyer or a seller of gold. Of course, you need to choose wisely when it comes to picking a gold miner. The gold sector is filled with tiny gold miners called junior gold miners, and many of these could go bankrupt at a moment's notice. This is why I focus on senior gold miners like Newmont Mining with the ticker symbol NEM. However, it's important to remember that even the senior gold miners could go bankrupt. Now, while this is very improbable, this is something you have to keep in mind no matter what investment you have. So whenever you go into a new investment, you must only risk the money you're willing to lose in its entirety. Additionally, the gold miners tend to magnify the movement of gold's price. In other words, when gold's rallying, the gold miners will increase even more in price. And that's great. However, when gold's selling off, the miners will sell off even more. So you need to keep that in mind if you decide to go into the mining sector. Newmont Mining is one of the leading senior gold miners, and I consider it one of 2 best in breeds. The other gold miner being Barrick Gold with the ticker symbol GOLD, and I own positions in both of them. I separate the allocation I want in my senior gold miners between those 2. While gold itself is often considered a safe haven investment, Newmont Mining also has exposure to other precious metals, and this helps hedge a little bit against the volatility in gold because they also mine copper and silver, which have industrial uses. At its current stock price, Newmont Mining has a substantial dividend yield in excess of 4.5% per year. However, with how volatile gold's been recently, it's important to remember that Newmont could sell off more than 4.5% in a single day, so don't rely on that dividend to hedge against the sell-off in the stock price if it happens. Additionally, since gold is priced in the denomination of the currency in which the mining stocks exist, in this case the United States, if the currency is stronger, gold will not perform as well as it does in other countries. For example, right now, since the US dollar has been so strong, the price of gold hasn't made any really significant all-time highs. But in other countries, gold has seen all-time highs. Personally, I believe that gold will see all-time highs even in denominations of the US dollar. Between the amount of debt that is being issued by the federal government and the high interest rates, it seems to me that many investors will flee to gold as a safe haven, thus causing the gold mining stocks to increase as well. This is why I added to my Newmont Mining position last week on November 8th. Adding 7.22% to my position at $34.92. This buy lowered my per share cost 1.43%, down from $41.85 to $41.25. And you can see that it did not hold that level of support. So my next buy target is slightly above Newmont's next level of support at $31.85. But even then, I'm prepared for Newmont to sell off significantly lower. From here, I will start taking profits with my next sell target at $51.26, slightly below the high that Newmont Mining saw in 2023.